When trying to get approved for a mortgage, there's no cookie cutter solution. Everyone has a different situation, and there's alternative solutions to help satisfy everyone's needs. Before we get into this video, I'd ask if you could like, subscribe, share this video with a family member or friend. It'll help my channel grow and reach more Canadians looking to learn about the mortgage and real estate industry. Like I said in the intro, getting a mortgage isn't the same path for everyone. People have different goals, situations, and plans. Not everyone can fit into the same mold, and there are alternative lenders out there who can help people who don't fit into the traditional bank's guidelines. So in this video, I'm going to be discussing the different types of lenders there are, why someone would use these lenders, and the details of each. First off, we have our traditional A lenders. These are your typical banks, monoline lenders, and credit unions. And A lenders typically work with the strongest of borrowers. These borrowers typically reflect strong credit, provable and consistent income, and an income high enough to service the loan. When working with an A lender, you get access to the lowest rate because you're looked at as a low-risk borrower. But what if you can't qualify on the A side for whatever reason? Don't worry, there's alternative solutions for you. The other lender I'm going to be talking about today is something called a B lender. B lenders typically have more relaxed rules when it comes to credit score requirements, income verification, and income amount to service the loan. Now, when working with a B lender, you'll typically need to provide a 20% down payment or have a loan to value of 80%. They come with fees and higher rates than A lenders, and these are all steps that B lenders take to mitigate the risk of lending to you. For whatever reason you're on the B side, whether your credit isn't as strong, your income isn't as verifiable, or the income to service this mortgage or loan rules are more relaxed, you'd be looked at as a higher risk borrower in the eyes of the lender. So they require more equity in the home, they charge fees and higher rates to work with you. That being said, they're also more flexible when it comes to past credit issues like consumer proposals or bankruptcies. Where A lenders are much more hesitant, B lenders are willing to provide you with financing much sooner after a consumer proposal or bankruptcy. And you also have the option to pay out a consumer proposal into your mortgage when working with a B lender. Now, what if you don't fit the mold for a B lender? If you have trouble getting financing through the A or B side, the next route would be private financing. Private lenders are corporations or individuals who are willing to lend out their money to you. Out of all the three lenders I'm mentioning today, private lenders are the most relaxed when it comes to their guidelines and regulations, but that does come at a cost. Private money is expensive. There usually comes with a lender fee that the private lender will charge, and rates are much higher than the B or A side. Because again, as you go down to the private money, you're looked at as a riskier lender because you couldn't get approved on the A or B side. So they use that to outweigh the risk of lending you money. So what are some reasons people would need alternative lending solutions? So one possibility is income verification. Not all types of income are looked at the same in the eyes of a lender, and lenders like to make sure your income is provable and consistent because they want to know that you can actually service this loan. For example, a full-time salaried employee's income is both provable and consistent through documents. They have guaranteed hours and their pay isn't fluctuating from week to week. But for someone who's part-time and their hours aren't guaranteed, yes, their income may be verifiable through documentation, but it's not consistent as their hours fluctuate week over week and don't have a set amount of hours like the salary worker did. So in this case, for the part-time worker, the lender would be looking at a 2-year average to get some consistency with the income. So now what if you don't have 2 years of work history? There's B lenders who only need 6 months of bank statements for verification of your income. Another reason is if you've had some credit mishaps in the past, maybe a consumer proposal, bankruptcy, or you just have poor credit utilization, which has lowered your credit score. An alternative solution can be one way for you to go, but working with alternative lenders shouldn't be a long-term fix. When working with alternative solutions, there should be an exit strategy in place so you can graduate over to the B side so you can get access to those better rates rather than spending your whole 25-year, 30-year amortization on the B side paying those much higher rates. So whatever was holding you back from working on the A side in the first place, you should have a plan in place to then graduate to the B side. So for example, if you need 1 more year of employment to make up that 2-year average, we can put you in a 1-year term on the B side, and then we can reevaluate your situation using that 2 years average and try to graduate you to the A side to get access to those more favorable rates. Or if you need to repair your credit, put a plan in place and figure out how long it's going to take you to get to your credit score goal. Match up your term length on the alternative financing side, and then once your term is up, reevaluate your situation with your now patched credit and try to move you over to the A side. So hopefully this helped give you a better understanding of the different types of alternative financing there are. So don't get discouraged if you go into your bank first try and they decline you for whatever reason. There's alternative options. So if you want to book a call with me to discuss your situation, maybe explore some of those alternative options, I have my calendar link below. Go fill the time slot and we can have a one-on-one talk. If you found any value in this video, I'd really appreciate if you could like, subscribe, and share with a family member or friend. Don't forget, I have those 3 free guides to help homeowners and future homeowners navigate the housing market. The first is the First Time Homebuyers Guide with a homebuyer checklist included. The second is the refinancing guide. If you're considering refinancing to access equity, get a lower rate, or restructure your mortgage landscape, go check that guide out first. The third is you found your dream home. Now you need to obtain financing on that. So those are 3 free resources that you should definitely go grab. Links in the description below. If you have any questions, comment them below and I'll answer all of them. I also have my calendar link below. If you want to have a one-on-one talk with me to maybe explore some of these alternative solutions, go click the link in my description, fill out a time slot, and I'll be happy to answer any questions you have.